Hello, Warriors. Let's have a good week. Who's up for it?
Good morning, Blake. Good morning, everybody.
Good morning. How are you, Kman?
Not too bad. Yourself? You had a good weekend?
Yeah, went fast.
I won't say anything. They're always too fast.
Yeah, so BN's still hanging in there for the end of the fiscal year, huh?
Yeah. I'd say so. And when we look at energy prices, we're firmly back above 100 in crude. Brent reaching even higher again. Yeah, I was looking at the yen pairs, the yen crosses, like such as Kiwi yen, Aussie yen, Canada yen. They're really reaching for levels not seen for a good while. The Kiwi yen actually tagged the last year's October high and shied away from it for now, but we're all still at very lofty levels, and I'm not going to run against it. I'm not going to chase it either because the levels are so high. But yeah. I'm getting slowly, surely. I prepare for April, a possible setback.
Okay. So Aussie's been the strongest currency against the dollar, and it's trying to pull back, but
yeah.
I don't know. It looks pretty good, especially if the dollar has peaked. I still think that we'll get one more run, but that's what I think. But what I really believe is whatever happens here, that if we take out these lows, the dollar has a setback coming of at least 200 bips. So that could take us to 5.5 here, where it's like Blake has alarms.
Yeah, it will all depend about what really is going to happen in the euro, right? Lagarde trying to be on the defensive again this morning. The German government still saying they cannot go without Russian oil. It's all weighing a little bit on the euro, and seeing the weight in the Dixie. It's probably holding the Dixie up a bit, I would say, right now. Yeah,
and I look at cable. And I think cable actually looks more vulnerable. I know you don't like it, but it held. It's too kind of convenient that it held the big round number here.
Yeah.
At 30.01.
Yeah.
I think we're going to take out BRN.
Yeah.
Here and go to 129. And if it does that and euro doesn't make a new low, that's going to be something for me to consider euro longs with. So.
Yeah, what is remarkable? What is actually remarkable or noteworthy, I would say, is this attraction, the really magnetism of 84 in the euro sterling. We're trying to break out on top. We tried again the downside, but nothing seems to work. And as we speak, we are back at 84, the figure in the euro sterling. So those two seem to be. Euro and the sterling seem to be in the money manager's book. They seem to be running quite well together.
Interesting. Yeah, we're
right now, and that's a bit interesting, I would say.
It's interesting to me as a technician is this was pretty directional.
Yeah,
it was like 2 weeks, right? Or really, this was the main move. And since then, just to work over the overbought condition, that was a pretty high reading, over 80. We've only moved sideways, and now we've worked off a lot of the overbought. So I mean, if it pulls back to 38 or 50%, it's going to actually look oversold with a very small retrace. And just one more thing with the gold here, to me it looks like we're going to get some type of ABC back to 1970 or so. Silver looks similar. So, part of a 3-wave rally, I think that's what we're going to get.
It looks like if we still take gold and silver as trading on the back of inflation, it looks that the market has, how shall I say, digested or accepted that we are going to trade in a very high inflationary environment, but it does have less impact on currencies or instruments that are related purely to inflation. It looks like the market is again suffering from collective Alzheimer and not knowing what to do with stuff right now.
Yeah, why do you think it isn't? Who's
Did
on
you
the
say
other
collective
side?
Alzheimer's?
Yeah, I've never heard that before.
That's what the market is. The market is continuously forgetting what happened half an hour before.
Oh, I thought you said
This made me snort. And good morning, guys.
The Alzheimer disease.
Yeah, well, I was gonna say, I always think the markets have like just severe. It's traders with ADHD, right? Like they can't focus for more than a day on anything. So it's like the market just continues to just like forget.
There's a good explanation for it in a way, because if you look at it from an investor's point of view, you have, like, for instance, to simplify things, let's say, for instance, you got 10% of euro, 10% of sterling, 10% of gold, 10% of dollars, and in an investment book, and then you shift it from the one goes down to 5%, the euro, the gold goes up to 15%. Let's put it that way, and then you have this gold move, but once it's done, your book does not continue to buy gold, right? Or for instance, and does not continue to sell euro. So once the books are balanced, there's other flows that need to drive the market, right? So it does make sense. I see.
So they do rebalance. You think that's rebalancing, like when gold's outperforming and they want it to be a certain portion of the portfolio and it becomes larger, they lighten up on that position to rebalance it?
Well, I mean, I think we saw this rebalancing happen, right? And you can say, like, a form of rebalancing was also the reason why the S&P 500 or the US markets are holding up, but the European markets went down. That was rebalancing, in my opinion. And then you have a rebalancing into other markets, like gold. We had the rush up to above 2K, and then, but once those flows are done, you need another catalyzer to continue to go, right? Unless everybody is short and needs to buy. But okay.
Well, like Jay said, a lot of Fed speak this week. What, 5 Fed speakers, right, Blake?
Yeah, it's quite a bit. I mean, Waller's comments just kind of got the attention of the market last week, so it's that's going to be really interesting to hear Waller's comments this week. So
the NASDAQ be on its way back to 15 grand?
I'm sorry, Kman was just saying something before you asked that question. What did you say, Kman?
I said there's 17 Fed speakers and 12 ECB speakers this week, so a lot of points will be had.
That's just fantastic, just great. I mean,
saturation.
Well, and now that we're past the Fed meeting, I mean, now you got every Fed governor is going to run around and saying their piece. So
they're prepping us for May now.
Yeah, so you were just asking about the NASDAQ, Dale, and I guess one of the questions I would have for you is, and I'll take over the charts here.
Go ahead.
How do you feel about yields? I mean, because if yields are going to continue to rally, you would think the NASDAQ underperforms, right? That would be my first inclination. Is yields go higher, you're going to start to see the NASDAQ really start to, underperform the rally that we're seeing in equity. So we have, the S&P, which is, trying to make its way. Oops, here, let me fix the charts there. Trying to make their way higher in this, double bottom. But you got the NASDAQ, which, you can see we've got a kind of a double bottom with the NASDAQ as well.
Yeah.
But the NASDAQ could still, move a little bit with the S&P, but are we going to get stopped up here, soon? That would be my thought. Or do you have any thoughts on that, Kman, since you're here?
On the NASDAQ?
Yeah.
None.
How about on yields?
I think we had our first hike, and now we are going to see how the next hikes will go in the broad sense for yields. I think the 2.25, this zone here really in the tens is going to be important. But I think for the viability of dollar rallies based on yields, we are going to have to see the curve move up a little bit, because if it stays this tight or even risks more inverting, it should weigh on the dollar sooner or later. But it's a bit of a tough call. But I think they will remain high because the Fed is going to catch up with the short-term yields, right? They
and you can see, like, yeah, you can see just you know, as the you know, the lower end of the curve has really flattened out. So and you know, look at this 10-year. I mean, this is a nasty chart. You're going to go to, like, just take a look at the weekly chart. This is pretty gross. And you know, I was talking to some friends this weekend. You know, everybody where I live is like
invested.
Everybody's a real estate agent. Right? Yeah. Everybody's a real estate agent. And everybody's talking about, you know, our real estate markets here. And one of the reasons why our market is so hot, Dale, you could probably appreciate this. So many people are moving from California and a lot of the, like, democratic states, if you will, coming to, you know, places like Arizona, where we tend to be a little bit more, you know.
Yeah. That's happening in Texas. I read a piece about that.
Yeah,
people are
Arizona,
moving to
Texas and Florida. You know, people are attracting, you know, people because people feel like they're you know, their rights are being infringed on a little bit. Anyway, the reason why I'm bringing this up is because everybody's also yammering about rates and about how, you know, you know, mortgage rates are at levels that we haven't seen, you know, since you know, 3-4 years ago. So that's something that, you know, a lot of people are really talking about. And I'm wondering if they're talking about it to a point where it's like, okay, now it's, you know, everybody's discussing it. But the reason why I say that is because, you know, you would think that as yields continue to move higher across the curve, you know, no matter if you're talking about the lower end or what, it's going to eventually weigh on equities. You would think, but, you know, here we are at the S&P, we're almost at the 200-day moving average. I mean, that should be tested today around the 4480 level. So I'm sorry, somebody was going to say something. Or somebody was saying something. Well, you know what? I actually do see here.
I'm here. I can say something.
I see Stelios. Good morning, Stelios. How are you?
I'm very well. Thank you. I'm very well. So talking about yields and equities, we have talked about this in the past. I think it's relatively straightforward that when yields rise, equities go down. Obviously, it will not happen every day, or, you know, it will not happen immediately. I think that this is going to be the case again. However, we did say last week, remember, from Wednesday, from the Fed onwards, we said that, look, if a market can't go down, and I'm talking about the stock market, if they can't go down with rising yields, with a hawkish Fed, and with the Ukrainian war still not resolved, then it's going to go up. So we said that, you know, be careful. Theoretically, we should be a lot lower in equities, but the path of least resistance is higher. And what have we done in the past 3 sessions? Well, we've gone higher. And I think that, you know, I am personally looking at the S&P at around 4,600. I think that's probably going to be a nice level to try and take some shorts. But again, when the market, when a trade is this obvious, and I don't want to use that word, but sometimes a trade makes sense. It usually means that the whole you know, the whole market gets one-sided, and it goes the other way. We saw that there was sentiment and positioning was quite bearish in equities, and that's probably one of the reasons why we've seen a relief rally. The question is, how do you time this, and where do you enter shorts if you want to short? That's a difficult one. If I knew that, I'd be a trillionaire. But I think 4,600 in the S&P is probably a nice 4,550 to 4,600 is probably a nice area to be looking at.
Yeah, you know, I'm and it's interesting how we fall on, and you're exactly right. Let me start by saying that the markets have been very resilient, and they've been, you know, climbing that wall of worry, if you will. And you point out all the things, right, that the market should be worried about, but it's not, and we continue to rally. But this is probably a good setup where you have Dale, you talk about it quite a bit. Turnaround Tuesday, you have a nice leg up in the market day. Let's hope that stocks end the day higher. Let's hope we rally maybe 1% or 2%, get above the 200-day moving average, complete this double bottom, or get close to completing it. And maybe somewhere above 4,500, we get to a level where we go, hey, the market looks a little frothy here, and then people realize that the Russia-Ukraine situation is still ongoing, and it's going to keep commodity prices higher, and it's going to eventually weigh on sentiment in the markets sooner or later. But speaking of which, do you guys have any? Let's talk about Russia and the Ukraine. What's the strategy there for Russia, for Putin? What do you guys think? And I'm not expecting any of you guys to be Putin experts or Russian experts, but what are your thoughts here?
Well, I'll tell you what. Sorry, I don't know if Dale was going to say something, but I just want to say very quickly, I think Putin is now in a race against time. He wants to get this finished. Whatever this is that he wants to do, he obviously wants to take over pretty much the whole of Ukraine, right? So, we're seeing, I'm not there, but I'm reading reports that, both sides are suffering losses, and it's the more this drags out, the worse it is for him. So I think he wants to get something done quickly. That's why he probably, he said to the Ukrainians that they need to surrender Mariupol, and, they refused, etc., etc. I don't know what you guys think, but I'm not an expert, but I think he will want to finish this quickly now.
How does he do that?
Yeah, well, how does he do that? And that's why I know I've talked a lot about the euro and struggling around the 111, 111.20 level, big breakdown point, blah blah blah. And this won't rally until we get through this Russia-Ukraine situation, which that's kind of one of the reasons why I want to talk about. But I agree with you, Stelios, that he is working against time, and then on top of that, sentiment is really turning sour. I've read things, and I'm trying to not read too much about Russia, and so I stop forming my own opinions and just focus more on price here. But it's hard
not to.
It's hard not to. You're right, Dale. But it's interesting how he's closed off a lot of social media, and because he's afraid of the tide turning for the people, right? So I would think there's a lot of reasons why he wants to get this done. Not just it's probably the financial toll that it's taking, all these sanctions that are taking on his country, and then on top of it, just to finance everything, a war as it is. Then the people, the risk that the people will turn on him. So I don't know. Kman, you have any thoughts?
Hope that if it happens,
go ahead, Dale, please.
All right. Anyway,
please go ahead. Yeah,
I said it's really difficult to see how the world is going to negotiate with someone they've labeled a war criminal.
Yeah. It's going to be interesting. I don't know. And Kman, did you have any opinions here?
Not really, but I agree on the race of time. What is it? 9th of May is their victory day, something like that, and people or a lot of specialists between brackets expect that he will want to finish everything mid-April or so, but for the rest very little expectations for it to end in negotiations, or he's waiting for the weather to get better for his tanks to be able to move again, in my opinion. And I don't know. It doesn't look like we are going towards a good end of the story anyway.
And I agree with that. And that's what that's why I look at the euro, and I know a lot of people want to buy the euro. One of the first, and he may be listening in right now, one of the first comments I got after I tweeted my week ahead video was, I think the euro is going to pop this week. What do you think, Blake? And I'm like, I don't know. I don't know about that. I don't have any euro exposure right now, but I have been shorting the euro crosses. And, I look at the euro dollar, and all I know is, I can look at it technically. And again, this is without definitively can look at the situation and say, I am 100% certain in my own mind that, Russia's going to do this and Putin's going to do that. And it's going to do, I can't say that. And like I said, I'm not a Russia expert at all. So all I can really do is watch price action and know that the euro is probably not going to do well with the situation the way it is. So with that being said, I look at the euro and realize how important the support is. I mean, this low right here is, a trend line. You can see it right through here. This low is also a 38% retracement, and that comes in, right at 110, 110.20, excuse me. And really, is it 110? No, I think it's 110. It's right at 110. The good news is that we have a nice setup. It's 100 pips, but it's a pretty clean setup here for the euro. If we get above 111.20 again, it's bullish. If you guys want to try to anticipate this move and say, well, because there's people that are commenting and saying, hey, just look at the history. This is what Russia does, and hey, if that's the way you feel and you feel that the euro is going to continue to stay heavy,
I'd buy it there.
Or you beat up, you get
euro.
you get it on the short side right here, and then you add below this low, or if you're Dale, you buy that trend line.
I like it where your lower blue arrow is around the 78.6 level.
Yeah, I mean, the way I look at the euro right now is let's see it break down again.
Maybe it's pacing.
Well, let's not forget, and I can go back and go to since the creation of the euro, going back to the 2000. That's the key support, right? It comes in at 108. So as long as it stays above 108, that's great. It's fine. So, but being on the short side here at 110 back to 108.50, I mean, that's 150 pips, right?
Yeah. Nice
I
trade.
mean, so it's not a bad trade,
No.
playing within this range. The range is 108 to 111. Yeah. So I, and I like to explain this to our traders, those of you that are in the, ForexAnalytix community. And, we do all of our private webinars right after this. We have the Morning Edge and everything else. And just so you guys know, the Morning Edge is where we go through, all the bias chart here, develop, all the key support and resistance levels for all these. We do it all as a group, right? Anyway, which that starts in less than an hour. But what I always tell people, our traders, is when you can find a range like this, you realize, like, this is the sandbox. This is your sandbox. This is where you're at, and you just play inside your sandbox now. Play the fringes if you can, or if you're going to be traveling to one side of that sandbox, great. If we break through 110, we might get to 108.50. And then once we start getting towards 108.50, 108 and a quarter, you start looking the other direction, because if it breaks below 108, it turns absolutely bearish at that point. Or if you get towards 111 and change, you look to be on the short side, and fade this as long as we stay below 111.30. And that for us last week, when we got up to 111.20, a lot of us were out there shorting the euro up there because we knew that was the upper end of its range. So you just trade within its range. And speaking of which, I heard
analysis, by the way, Blake.
Oh,
excellent.
Thank you. I heard Kman talking about the dollar yen. Kman, you still here?
I am here. I'm here.
Oh, okay. Hey, I heard you talking about the dollar yen, and the dollar yen's been in a lot of discussion as of late, and you can see the last leg lower that we had in the dollar in the dollar yen. We're at the 261% extension, which is a extension of the golden fib. You have the 161% extension, which was at range high. So you knew when that broke, the next place you're going to be is, the 261% extension. So we're there, very overbought. And you'd made mention that you're not buying here, but you're not selling here either. Is that correct? We lost them. Or
Sorry, no. Oh, I had my microphone up.
Oh, yeah, that happens.
No. I was long for a very long time, and also
Yeah, and rightfully so.
Sorry.
I was going to say rightfully so. You were long. You called it way down in the 113s, 12s, 10s.
I was started to be long just below 110.
Yeah. Okay.
But the thing is, now it's just like maybe a scalp here and there. But I'm really watching the calendar now, and I'm okay if it goes another big figure. I'm okay to not be fully engaged or accompanying in it, because I was looking at those yen crosses. They are starting to be at quite lofty levels, and the speed they went up is quite remarkable. I think Aussie yen did what, like 10% in a month's time or so.
Yeah, I mean, this is crazy, right?
They are big moves, and I really want to be cautious for the end of the fiscal year. Are the Japanese investors going to pour more into dollars or yen crosses starting of April? I'd be cautious. I think we are not date-wise, calendar-wise, we are not too far from a correction, and it might happen, that we're doing tops in all of those pairs on the 31st of this month, and then all of a sudden come the 1st, and you have a bit of a black hole to the downside, and they can drop 1% in the Tokyo session. I'm just, it's a possibility, right? That what I'm thinking of.
Yeah, and so when does Japanese fiscal year end? What is the end of the month, right? Yeah. Okay, so it's that's what people have to be thinking about from a calendar perspektive if you're dealing with, if you're dealing with all these yen pairs. And it's been a great call, and you're right, another 100 pips or another big figure from current levels, it's not unlikely. And if we are drawing this out correctly, which has been pretty succinct as we've been following it, is this big channel resistance comes in just above 120. So that seems pretty logical to me. I'm hoping we see a little bit of a pullback, because ultimately I'd still like to be long. I really want to be long on a move back to 118, because it is such a massive breakout. If you guys haven't seen the magnitude of this breakout, and the way I like to explain it to people, and I've been, talking to people in the currency or in the ForexAnalytix community, you don't see the chart here on this screen. Let's do it this way. And this is the conversation I've had with our ForexAnalytix subscribers pretty much every day for the last couple of weeks on the morning edge and, the daily roundup. That's a trend line from 1990. So I go back and ask you, where were you in 1990? I mean, I was just graduating high school and joining the Marine Corps and in boot camp. And that was a long time ago. And I think about that and say, that's the magnitude of the breakout that we're seeing in the dollar yen. And you have to think about that, like how long ago that was and how significant this is. When I talked to people about technical levels, I'm like, you have to treat technical levels like you would an adult, right? The older the adult, the more respect you should give that adult. I look at, grandparents and elderly folk as I have so much respect for them, and they have so much wisdom. And that's the way I looked at technical levels. If a trend line is just, been developed over a couple of days on a 4-hour chart, it doesn't matter to me as much as something that's been in process and development for 30 some odd years, right? So this is how significant it is. That's why you don't really want to be longer term short something like this. It doesn't mean that it can't reverse, but it's going to be a little bit more stickier than every other chart out there. So just something to pay attention to. But hopefully as Kman, as you're talking, as we head into fiscal year end, maybe we will see a little bit of a pullback here and allow for some better entries at cheaper prices or at lower prices.
Of course, the energy prices will still be a big factor. But also we are entering, and we can talk about that later, about what's going to happen in April, because I think it's important to know that it's Kuroda's last year at the helm of the BOJ as well.
Dude, all that guy wants to do is
that
guy is a drinking fool. I love it. All right. Is this Kuroda's last year?
He's entering his last year as a head of the Bank of Japan.
Wow. Wow. There's
a lot to happen in 2022, 3 in Japan, I think.
Wow. That's a big deal. And I mean, we could probably have a longer term discussion about, you know, that all, but hey, I got to mention this before we go. If you guys have not seen this, I'm going to put this link right here. This is the Trader Summit event. Register. There are, and I have to say this because this has got to go out to everybody. This is the Trader Summit event. Seating truly is limited. We only have licensing for so many people, right? So if you want to be here live and get a recording, register. It's free. And you can see all the different speakers that are already lined up, right? That are already lined up. You can see we have a pretty stellar lineup coming your way. And we are adding to this. We are just confirming several other spots of speakers, but it's going to be an awesome event. It is April 8th through 10th. And remember, if you can't be there because you're like, oh, shoot, I'm traveling that day, doesn't matter. Sign up so you can get the recording, because once you have your seat, you can be there live. And if you can't be there live, you'll get the recording. So make sure you register. Visit our sponsors too. And speaking of our sponsors, Trader Funding Program, if you guys haven't checked that out, that's one way that you can get ForexAnalytix for free and for a period of time, because we want you to trade our money. So here you go. There is the link to the Trader Summit, or our Trader Summit, Trader Funding Program. So if you guys want to access more money you have to just take an assessment. We do charge an assessment fee. We have several people that have, in the last 3.5 weeks that we had launched this, we have people that are accessing these larger accounts, and you make 75% of your profits. It's a hell of a deal for a prop firm. You just have to pass the assessment, and we've had several people do it already. So if you guys think you're good enough, come check it out. All right. With that being said, Kman, thank you for all your thoughts. Stelios, thank you for all your thoughts. Coach Ois, thank you for all your thoughts. And did I miss anybody else here who's here today?
Stelios.
I said hello. I said thanks to Stelios, but he already bowed out.
He likes to be thanked twice.
He does, but it looks like I missed Grega, and looks like
Grega's here. Jane.
And Jane, hey, well, anyway, well, Dale, I'll let you take over. Have a great interview. Thanks everybody for being here. I'll see the rest of you all in the Forex community. I'll see you in 45 minutes for the Morning Edge.
Thank you, Blake. Thanks, you,
guys.
Team. Thank you, Kman. Great input today, like usual.
Have a great week, Dale. Great interview. Bye.
Everyone. Dana, my trading warrior brother, welcome back to F.A.C.E.
Thank you, brother. Good to be back.
Yeah, so Dana, you want to share your screen down there?
Share screen, yeah.
All right, so you rode the uptrend pretty well, and there is a lot of time lapses between when you and I have a conversation, but definitely market conditions have changed since our last interview. And I just want to start off with I think the $1 million question is, are the lows that we had recently just setting up a bear market rally, or was that the end of a correction and perhaps new highs are ahead? I know that you use, you trade your signals. What does Dana Lyons think, though, outside of your, the algos you use to keep you in trades?
Right. Well, as always, it's a dangerous question to go on what we think versus what our signals and what our models say. But I know there's a reason we've spent many decades putting together quantitative objective models so we don't have to think, right? So
yeah.
I'm
wondering.
Yeah, experience does count for a lot, certainly, and especially in knowing how not to get yourself in trouble by doing too much thinking. So,
right.
The lows are a little ambiguous to us in terms of, okay, in the U.S. equity market, it was certainly, we sent out a message, free newsletter this weekend saying, okay, the conditions were in place for a bottom. Was it a substantial intermediate term bottom? Do we rally for several months? Or was it just a short-term bottom? Do we get a dead cat bounce here and then go down and make new lows? So the jury is out on that. I would say we did have the January, February lows and retests. We had adequate type of capitulatory readings in terms of market internals, in terms of investor sentiment. It was pretty bearish in some areas. We had some washout type readings in terms of new lows.
Yeah.
And some other
Weren't there a few missing, Dana?
There,
I mean,
yeah.
I kept hearing people like 90% type down days, or we really didn't get that swoosh of panic.
That's right. And that's the other side of it. It was, if this is going to be a major intermediate term low or cyclical low, we didn't get, the unambiguous washout type readings that we typically get, just the complete give up, the complete waterfall decline like you see back here in the COVID crash. We didn't really get that. And in fact, we surprisingly, after that retest in February, came down. This is the value line geometric composite, which most people might not monitor, but this tracks the median stock in the market. So we like to watch it because we want a large part of our risk model is determining what the overall market of stocks is doing. So what is the majority of the stock market doing, not just some cap weighted average. So this tracks the median stock, and we had that nice low at the end of January, came back and tested that low at the end of February, got some decent capitulatory type readings, bounced, came back and tested again, threatened to break down, got nice little sneaky false breakdown.
I think NASDAQ was the only one to take. I think NASDAQ 100 was the only index to take out that prior low by a little bit, but there was certainly glaring divergence when it did so.
Well, I agree. But from a purely technical charting standpoint, you can see the low was made right on that 23 retracement from the 2020 low, and 50% retracement from the breakout from the election in 2020. So it happened. You had that good confluence, like you say, of fib and other technical reasons for us to bounce there. If you look at the NASDAQ 100, you get a similar story. Here's the 38 retracement from the 2020 low. Boom, right on. Did not make really a lower low be below that intraday low from February. Bounced off there. If you scroll back even further, some people don't go back this long, but 23 retracement from the lows in 2002. So right on that same number. Wow. So you had some, and not to mention the 61 retracement from the lows after the 2020 consolidation. So you had enough technical reasons for us to bounce. You had some internal and sentiment type washout or semi washout reading. So you had enough reason to bounce from there, whether, like I said, whether it's going to be a multi-month rally or whether just a short-term bounce that leads to lower lows. The jury is still out. We are, if you want me to put some subjectivity into it, we are in the bear market camp. We think there are too many excesses in the system that need to be corrected, that have not been corrected. So we are in the bear market camp. So we're looking at, we think, a bear market rally right now. We could be proven wrong if we continue to rally sharply and recover some of the key technical levels. Right now, we're in the bear market.
Okay.
Bounce.
Yeah, that's
camp.
what I wanted to get. NASDAQ up around 15,000, 15,200 or so would be a nice level to consider shorts, don't you think?
If you're looking, so if we don't have 100% conviction on our models right now, our intermediate term model is still bearish. It's mostly based on internals, so it takes a while for it to turn around. It doesn't turn on a dime. The signals are on average like 2 to 6 months, so it doesn't turn on a dime. It's going to take some time. So right now, we're trading the range. We're shorting that resistance like we did. We bought some on that retest or covered a lot of shorts on that retest in February. Did not get aggressive in buying. We kept our exposure very low on a net and gross basis. When we rallied to resistance, we shorted more aggressively there on the bounce. Covered again, like on the NASDAQ here. Or if you look at the S&P 500, covered again on the test, the recent test last week, bouncing into some nice resistance now. So we want to either initiate some more shorts here, some more hedges, or the other thing we're doing right now into resistance is selling some longs that have broken down, no longer represent relative strength, because we believe a lot in relative strength. So when we're picking out longs, we want to pick out the strongest performing areas of the market, like technology used to be. But you look at, here's the XLK, broke down clearly, at the end of February, is challenging some of those breakdown levels. This is not demonstrating relative strength anymore. So we still had some technology, some other growth names. So into this bounce to resistance, we want to be selling things like this, not necessarily aggressively shorting. There are some things that we are shorting here, which I can get into. But right now, especially keeping our net exposure pretty low and selling stuff that we don't want anymore. And we don't think it's going to lead.
Yeah. How about banks?
Banks
Dana, with if yields, they really didn't do that much on this recent wave in rates, and it's almost like people think that there's some, potential contagion from Russia. What do you think of them?
Well, we're very bearish on bonds. We think rates rise for a long time. But not in a straight line. And right now we think yields are hitting resistance. So if that's true and the yields come down from here in the short term, financials could be in trouble. So if you're looking for an area to maybe try a short, here's the XLF, here's the financial ETF. So held support around that 36 level, but bouncing into some resistance here. This is not a bad, if you think rates are coming down from here, at least in the short term. Which we are. We've been short bonds. We're covering bonds right now, covering our shorts in the bond market here. Not a bad spot to try a short in the financials. And on the flip side, if you talk about
commodities,
what's gonna maybe work in a environment where rates are coming down, at least in the near term. Here's utilities, XLU. Talk about holding up well in during a bounce in yields of late.
That's amazing.
Here's the XLU sticking right up near the all-time highs from 2020. And I will say trading utilities is one of my nemesis. There's always, you always have a handful of things that I always seem to get them wrong, but utilities hanging up very well. If rates do come down sharply from here, and like I said, in the short term, in the long term, we think they go up. But if they do come down, we could easily get a breakout and a run higher in utilities.
Sure, be a tailwind. They did so well with a headwind.
Sure, they held up extremely well. And I'll just touch on here interest rates. Here's the 30-year yield. Like I said, we think 2020 may well have been that elusive long-term low. There's a approximate 60-year cycle in interest rates that was long overdue to bottom. We think 2020 could have been that blow off. top in prices, bottom in yields, and we could be looking for rising yields for the next several decades even, which people might scratch their head, especially short-term traders. But like I said, it won't be straight up. So we've got resistance in here on the 30-year around 250 to 260. So we're covering a lot of our short exposure in here. If you look at the 10-year, you get a similar story. On the 10-year, you've got resistance back from 94, back from the 2006-7 top, even back to you get the 61 retracement from the top in 2018. So
what do you think
of a confluence here?
Yeah, what do you think of this, Dana? I mean, I try and think of reasons, and I actually think we could pull back on the 10-year to 1.5 or 1 once we peak, and that would just be a correction of the move that we had in the last year or so. And I can't think of any reason for that to happen besides risk off.
Yeah, definitely. And you know me, I try not to think of any reasons that. Yeah, and try to avoid the headlines. You know,
that's why I only talk to you like 3-4 times a year, so you don't have to. I get to rattle your cage.
Yeah, well, in that sense, I'm a very boring interview because you're like, what do you think of the Russia situation? No. What do you think of the Fed situation? You know, the market is the all-time best discounting mechanism. And if you're going to worry about headlines, why do you bother looking at charts? Why do you bother analyzing data? Because it's all filtered, it's all discounted through that. So ignore the headlines but when are there not headlines, right? There's always going to be headlines. Just tune out the noise, as we say. Focus on the market data and focus on the charts. So we're into what we think is resistance here in the 10-year up around 225 to 230. So like I said, we are covering a lot of our bond short exposure right here.
You have a view on energy in here? We got to 130 and broke $30 and we're rebounding here now. So wondering what you're doing with the commodities.
We are still bullish. The uptrend is still in unless you're looking at a very short term. But this is the GSCI crude oil index. So maybe this was a near-term blow off top. Yeah. It's possible in commodities, and it's possible we consolidate for a bit. But for now, as of now, I think the uptrend is still in place in commodities. So we're still buying the dips in commodities almost across the board. Energy, precious metals, agriculture, yes, wheat, corn. We trade for our clients. We trade all ETFs. So you're looking at wheat, WEAT, testing support here around 970. Looking for a bounce. Maybe we test those highs up closer to 13 again. Corn, the same thing. Corn has actually held up
better,
pretty well. Not much of a blip. So. Yeah, CORN testing support around here 25.5, break 27.5. We could run higher again. So commodities almost across the board. We are still in the buy the dip camp. Again, nothing goes straight up.
Even if the Fed raised rates 100 times, is it going to increase the corn crop or the wheat crop?
Yeah, again, you're telling me to
think,
put on my subjectivity. I don't know. What I know is that the uptrend is still in place, and I'm not going to fight it. Right?
Yeah.
If that changes, if that changes, then I've got ammunition to.
I'm just saying the Fed can't print corn, Dana.
Yeah,
that's all. They can't.
I got you.
All right. So interesting. I mean, it's kind of a little change of tone and tactics and. Different markets that your stuff is adjusting to, and
for sure.
Looking forward to it
for sure. And there are a lot of things. We started right off the bat on the U.S. equity market, which is a little bit ambiguous right now, except for the short-term trading environment. A lot of these charts are less ambiguous. You look at interest rates are pretty clear to us.
Yeah.
Brazil is testing some near-term resistance that has potential that breaks through, but there are other equity markets that you bring up that are less ambiguous to us. Europe, for example, here's the stock 600 in Europe. Got more of a washout into the lows a couple weeks ago. Was more of a clear buying trade signal for us. So we did actually load up on some, maybe I shouldn't say load up, but we bought a decent amount of European exposure and confidently so, because we saw a good confluence of better fib support there. So here's the stock 600. On the flip side, we've gotten a sharp rally. We are approaching major resistance in Europe. There's the stock 600. You look at the individual countries, the same thing holds almost across the board in Germany, France, and elsewhere. So if you're looking for a good shorting opportunity, Europe is, I think, the best place right now. So we're going to be reloading on our Europe shorts in here soon, and look for at least a test of those lows. If not, if we are in a pure bear market, then we could see even substantial new lows. But strong bounce here right into the meat of a lot of resistance.
You have a view on the dollar, Dana? Because that would probably have impact on what you're talking about here.
Yep. The dollar's also key development rate recently. So here's the US dollar index, a couple areas of resistance that it just overcame. So you look at the uptrend from 2011 that it had broken, reclaimed that around 97.5, the same spot that the 61 retracement from that 2020 top. So once we broke there around 97.5, 97.70, that opens up further upside in our view. So
and gives you a great line in the sand, Dana.
Yeah, absolutely. 97.5, 97.70 is a good spot to be buying the dollar in our view. If it if it breaks that, then okay, maybe we're wrong. But like you said, that's a good line in the sand. So we'd be buying the dollar there. We'd be selling the euro into rallies.
Okay. So best way for people to follow you, and Tom Durkin says he's been following you since the last interview. So glad you got a little traction here. Why don't you let the attendees know the best way to follow you and get your work, and great to just hearing your voice, buddy.
Yeah, always fun talking to you. I mean, you guys, this is one of the sharpest communities I think that I follow. The F.A.C.E community, and the interviews are always, top notch, not superficial. I mean, you guys get down into the nitty gritty that helps people make money, which is what this is all about, right? So, here's one of my trading services, the lion's share. Our main business is managing money. If you want to follow us and what we're actually trading, but you're a trader yourself, the lion's share, it's at lionsharepro.com. Basically gives you an all access view into what we're doing with our managed money. So we actually give you a pre-market video on what we're looking at, things we're looking to trade, charts we're looking at, and then throughout the day, it'll give you some updates on actual portfolio moves that we're making. So lionsharepro.com is that, and then we've got other resources. There's our managed business is jlfmi.com. We've got a 401k service for 401k investors, and some other spots to find me on Twitter and StockTwits and elsewhere. So again, it's always great being on, and appreciate any discussion, any dialogue. If people want to shoot some questions to me, you can find me at info@jlfmi.com. Happy to engage.
Thank you for sharing your views this morning with us, Dana. Really, it's interesting that we got to talk about a two-sided market after a few years, right? And
that's right.
And I was looking forward to hearing what you thought. Consider your views important in my intelligence gathering too. So thank you again for being here, Dana. And I'll contact you and keep things going. We'll talk again in the summer. We should have some answers by then.
Sounds great. Yeah, it'll be interesting for sure.
So everyone, Dana Lyons, trade, invest with the heart of a lion with Dana Lyons. All right. So that's a wrap for us. You could join the team in 20 minutes on the Morning Edge. And I think Dana just gave you some great charts that provide an edge. Good hunting today. And remember, don't just count your pips, count your blessings. I'll see you guys tomorrow. Thanks again, Dana, buddy.
All right. Thanks, Dale. Always a pleasure.
All right, buddy.